Selling naked puts can make you rich, and today I'm gonna share 7 trades that could net you almost $3,000, $2,894. We're gonna go step by steps. We're gonna use Tasty Trade. So let's get to it with the trade. The first trade is Google. I'm gonna open the Excel. This is what I do every day. I have an Excel. I have margin account on Tasty Trade. I'm gonna show you step by step which option, what you could have done, and how you should have taken the trade. You're gonna start with Google right here. Let's go to Google. This is all my list from the last couple of days. Google, you see, October 30. The price today, as of now, when I shoot this video, was 178, and I sold the naked put 165. You're gonna go to 165 right here. Okay, I'm gonna go to trade. You're gonna pick Google, the 54 December right here, and we're gonna pick the 165. Why am I doing this? Why am I doing the 165? Because the expected move of Google is anywhere between 185 to 165. I'm just after the expected move, but I've already posted earnings. If you go back to the chart, I like to use the most important indicator to me, which is this one, average true range ATR. Average true range in a nutshell means how much Google moved on average in the last 14 days, and that's including right now, including the earnings, which is $3.84. So I'm taking this number, and because it's Google and because it's after earning, usually when I sell naked puts, I use the 8 ATR, which is super far out of the money. But because we are right here, I'm gonna take this number 384, and I'm just gonna multiply that. Instead of 8, I'm gonna multiply it by 2, and I got this number of 768. So 2 ATR is about 176 minus this is 169. So I went another, for the safe cushion, like free ATR, 165. And if you sell the 165 naked put, just one contract, you can collect $250 as of now. Once you take the trade, $250. And look at this. This is the beauty and why I like to use Tasty Trade and not Robinhood. If you have Tasty Trade, you need to have $5,000 in buying power to execute this trade and collect $250 selling naked put on Google. As of now, this is your money. If you have Robinhood and you want to do this trade, you will collect the same $249, but you will need $16,500 minus your credit. Would you rather put $16,000 on the line, or would you rather put $5,000 on the line? Comment below and say 5,000, just 5K. Okay, word of the day is 5K, so I know you're watching. Collect $250 if Google stays above 165 by expiration. Great. If it doesn't, you have a chance to either close the trade before or get a sign, and Google, I want to be a forever holder of Google. I prefer to do it at 165 minus my credit, so my break even is actually 162.5 compared to 176 where it is now. You got yourself 79% chance that it will never happen by the time of the expiration. This option will expire worthless, and you have a chance of 90% that this option will lose half of its value by the time of before the expiration. Probability of reaching 50% of max profit at any point before the expiration. What does it mean? That this 250 will become 125. Close the trade, move on, release your buying power, 5,000 compared to 16,000 on Robinhood. This is the key, and that's why I like it. Okay. If you do a quick analysis, you can read if the price of Google stays above 162.5, yeah, you got a chance to make 250, and if Google goes to zero, this is what you lose. Pretty simple. Okay, let's continue. I'm gonna keep showing you stuff. Another important thing that you need to start focusing on is this number, theta. Theta decay is absolutely amazing. that the price here, the $5.09, means that this option, the 165 put for Google, will lose $5 every single day until it will be zero. Basically, it changes 5.10, 5.9, doesn't matter. Every day you go to sleep, you wake up, this option theoretically should be $5 less, and down and down and down until it's zero. I usually close my put options that I sell at 80% profit. Tasty Trade, they say to close the trade at 50%. It's up to you. But either way, this is a very important number to consider. And the most important number, as I said, is the $5,000 buying power to collect $250 compared to $16,000. If you do the math, you risk your max profit is $250, and your buying power at risk is $5,000. That's about 5%, correct? Let me do the math. 250 divided by 5,000, 5% ROI on risk, ROIC, risk on return on risk, ROR, return on risk, basically 5% on this trade. And if you do 250 divided by 16,000 on Robinhood, why would you do that? Well, where's the point? This is why I like margin, but I like the margin safe with far out of the money ATR. Let's move on to the next trade. I'm gonna show you right here. The next one was Kimberly-Clark. Okay, now I haven't done this trade, but I'm just showing you the possibility. Let's go to KMB so you can see stuff that are basically like what's out there. The price right now is 134, and you can do the 130. Okay, so let me show you this. You go to chart, and why I've picked the 130, because we are here to go down. So we're already here, but we got a sell signal at 142. Okay, that's stuff that, you know, it's important, but as I said, the most important item is this one. The ATR, average true range of Kimberly-Clark, is 213, and 213 basically, if you do 213 times 2, is about $4, 426, and 134 minus 4 is 130. Now if you go to the 130, okay, again to December, 50 days from here, the 130 put, yes, you can collect $180, which is fine, and you're risking $4,000, 3,900, so something to consider. You got 75% pop, 85% of P50, and look at the theta, $3. $3, so the Google was $5, and Google was like 3 ATR, and Kimberly-Clark is 2 ATR and $3 theta decay. And remember, Google was 5,000, this 4,000. So if you only have like one trade a day and you only have like 5,000 in buying power, between those two, Google so far is the winner. However, if you want to buy the Kimberly-Clark, which is the toilet paper company, I think, and if you check the graph, 148 in here, 145, and if you think buying Kimberly-Clark long term at 130 is a good deal, maybe this trade is for you. So this is the second trade. I'm gonna move to the third trade, which is AstraZeneca, AZN. Now, just so you know, I'm not finding those random trades. I'm finding them based on IV. Now, the IV rank and IVR and all that is on the other, it's trade web based. I'm using the Tasty Trade, not app. Like I download the software. It has a lot more options than this one, but the web platform is a lot better to just do a YouTube video because you can see a lot better. So I saw the IV rank on AZN is very high, so that's why I put this trade on the Excel. Now the price, just so you see, 72, and you see here it was 73 when I put this on, 65, and that's the put to sell. Why? Look at this, look at this. Here you see the IVR rank, 105, 105. This is insane. IVR rank over 50 is basically you collect more income as an option seller. IVR over 100, I do 8 ATR. If I found a stock with over 100 IVR, and there's a few every day, there's a watch list from Tasty Trade and all that. So I go over the watch list, and if it's over 100, and if you get some good puts, you can do this trade if there's liquidity and all that stuff. So you see here the number here, 1.22. If you take this, if you take the 1.22 multiplied by 8, it's almost $10 from where we are now to collect that 8 ATR, which is super insane, super far out of the money. And this way the trade was 65 minus 73, it's about 8, like 6, 7 ATR. We are here, we're getting close to the 8 Kettler channel instead of 2. I always do 4 times the worst case scenario. The Kettler channel, people use it for 2 Kettler channel. I use this for 8, meaning that 70 right here, the 70 price is 8 Kettler channel, super undervalued. So I'm even going further, and I'm gonna go to the 65. So if you go to the trade tab and you're gonna click here and you're gonna go to the 65 right here, you also see the expected move until then is between 70 to 77 and a half. And I'm gonna pick the 65. And if you do just this one trade just to practice and see what's going on, you see that you collect $64 up front, but your buying power is a lot less. It's less than $2,000, $1,964. But again, if you have Robinhood and if you took this trade, you would need to put 6,500 on the line. And Tasty Trade says, you know what, you're just gonna put 30% on the line, which is $2,000. Your theta decay is not a lot, $1.80, but again, you're only risking 2,000. Your possibility of profit is 86. The chance that this option will lose at least half of its value before expiration is 95%, and delta of 14, meaning if it doesn't matter for us, if the stock goes up $1, that's extra $14 for the stock, something like that. I don't know. I know delta from buying deep in the money leaps, but for selling options, I focus on theta, which is not a lot, 180, but you do risk only $2,000. Okay, so that's trade number 3. Something to consider. Always look at the IV rank. I don't know if Robinhood, I'm not comparing Robinhood, I use them for yield max, but for selling naked puts on margin, I use Tasty Trade. Let's move on to the next one, which is HIMS. A lot of people love this company, including myself. So if I go to HIMS right here, okay, and look what I've done. This is actually a good one. Look at the IV rank 71. It dropped a lot today, 15%. I don't know why. They have earnings, but look at this 13 put. So if you go to the 13 put, again, 15 days, 50 days from now, 51 days from now, the expected move for this stock is anywhere between 24 to 14, and I go outside the expected move, the 13. I'm gonna click on here on puts, and I'm gonna collect $50, okay, for one contract. But look at my buying power. This is great for small accounts. $830 for one contract. If you have Robinhood, again, if you have Robinhood, you will have to put 1,300. If you have Tasty, you just put 800 on the line for $50. You might think it's not a lot. You can do, I don't know, you can do a couple of more than just one contract. In order to change the contract on Tasty, you just click here, Tasty Work, on quantity, and now you have $100 and 2 contracts, and your buying power just doubled to 1,600. Max profit $100, for example, for 2 trades. 83% chance that HIMS will not go below 13 by expiration. 88% that this option will lose half of its value before the expiration. And the theta is pretty nice, almost $3. But again, if you compare this to the Google that we saw, let's do the same buying power, which is, let's say, another one. If you do the same buying power, if you only do one trade a day and you have 5,000 of buying power to do so, you can put this one, for example, and now you have 6 contracts. You see here, 6 contracts, collect $300, and the theta decay every day. This option will lose $8.80, and most likely a lot more post earnings when this thing settles down. But if it doesn't, and if it goes to below 13, yeah, I'll be happy to pick up a couple of hundred shares for HIMS because now it was 22 like a few days ago. Super volatile. This is a stock, like a growth stock for the next 5 years. But I prefer to buy it at 13 instead of 19 or 20 or 22 and collect a lot more income while I wait for the price to come to me instead of just buying and FOMOing in. So that's something to consider if your buying power is low, or if you just want to collect buy the stock and use a lot less margin than what Robinhood is asking. Let's move on to the next one, MSTX. This was a good one. It's not a good one until we close the trade at the end of the day. But MSTX, look at this. The price was 50 something, 54. 25 is the put. How crazy is this? 25 puts. That's 50% from here. You see here, MSTX, $50. That's the, if you don't know, MicroStrategy, Misty. I always say Misty. From here, Mr. MSTR times 2. Okay, MSTX is MSTR times 2, 50 from Defiance, 50 days left, and the put is 25. And if you go here to the 25 puts right here, look at this. For one contract, collect $240. How crazy is this? But look at the buying power. That the RR, return on risk, is absolutely insane. What does it mean? It means that if MSTX drops 50% from 50 to 25, and for that MicroStrategy needs to drop 25%, okay, if everything all else is equals, then yeah, I'll be happy to buy 100 shares at this price, at $25, and wait for MicroStrategy to go up. But if it doesn't, I'm collecting $240, and I'm only putting on the line, this is actually cash secured, I'm only putting on the line 2,260, but it's so far out of the money that I'll be happy to do so. You got 76% pop. It's not always accurate, but the delta for one contract every day, the price would go down by $7.58. And of course, I think they have earnings today or tomorrow, or they already posted like an hour ago, I don't know. But either way, $240 in your bank account, in your brokerage bank account, basically, until you cash it out. This is yours, okay? And this is the collateral that you need to put. This is actually a cash secured put because it's super volatile. But yeah, this was a good trade. It's not, again, not a good trade until you close the trade. Next one, we got UPS, and this is why I like to do portfolio margin. If you see UPS, this is like a forever stock I want to hold. January 16, 2025. Okay, I'm just gonna show you what I mean. January 16, 2025. So I'm gonna search UPS, and the put itself was 100 right here. We are now at 133, and you go to January. I go 1 year in the future, which is this one. Yeah, January 16, and the 100 put is right here. Now, why am I doing this? If you go to the chart, okay, right here, look at this. This is what I do, or what I will do once I have portfolio margin available, which you need $175,000 to apply for portfolio margin, and then your leverage buying power is, instead of 2 to 1, it's 6.7 to 1, and there's tons of other rules. If the stock, if the naked put that you sell, for example, is 15% or more out of the money, then the buying power is like $100 or something like that to take the trade, which is insane. That's the goal for me, to get to 175K and get approved for a portfolio margin. It will open so many more doors. So let me show you why I've done this. I haven't done this trade, but I just put it on the Excel. If you do have portfolio margin, the ATR on UPS is 2.9. 2.9, if you do this times 8, $23. 133 minus 23 is 110. That 8 times the expected move of UPS. This isn't Tesla. This isn't Misty or Nvidia. This is UPS, a stock that you buy and hold for your kids and grandkids. 8 times the expected move to the downside is 110. Yeah, I'll be happy to buy, and I even went even further to just do the 100 because it's just a round number, and I collect upfront. You can do this trade right now and collect upfront 365, but you do need to tie up capital on a margin account of $3,000. And if you have Robinhood, you would need to tie up $10,000. That's how crazy it is. But that's something to consider. But if you have, first of all, that's why portfolio margin is the key for all of this game that we're playing. On portfolio margin, the 100 compared to 133, and if you notice, all the trades that I've done in this video and the other videos since I started this channel a few days ago are about 20% or so outside of the money. 20%, 30%, 40, 50, depends how volatile the stock. 70% on DJT. If the stock is over 15% out of the money on a portfolio margin, this is the key, on a portfolio margin, this 3,000 buying power, I want to say 500 or something. I don't know, I'm not sure because I haven't done it, but I will, and once I will, if you subscribe, you will see this in live action, because I assume it will take me, I don't know, less than 6 months hopefully to get to the 175k. If everything goes well according to the plan, I will ask for approval. Tasty needs to approve you. They need to see that you also trade and all that stuff. And once they approve you for portfolio margin, I will be able to sell deep in the money leaps on forever stock, just like UPS. And instead of tying my buying power for the next year, I would just use nothing, 300, 500 buying power, but you also get a 6.7 leverage. So on your, let's say, 200,000 portfolio, you have like 1.3 million dollar in buying power. It's not your money, it's your buying power. So just a lot of things to consider. I hope I will educate you, because there's no videos on YouTube about this. No one is talking about portfolio margin. 99% of the videos that I'm seeing about selling options is cash secured puts on Robinhood, which is the worst way to use your capital, because Tasty gives you a lot better buying power than Robinhood, which they want you to use your whole buying power even though the stock price is not there. So that's what I have on this one. Let's move on to the next, SMH. This is another trade that I do daily. Not this specifically, but I have a list of 7 ETFs, microconductor, regional banks, KRE, utilities, energy, stuff like that. 5 to 7 ETF that I sell to ATR every single day. I pick one of the list, I go one by one on the list, and I sell to ATR. You see the price right now is 250. The SMH is the Venture Vector ETF trade. It's the semiconductor, the NVIDIA, AMD, and all of those basically are wrapped into one. And because it's an ETF, I don't have and it's not leverage, I don't have a problem with just 2 ATR instead of 8. So you see here the ATR, again, it's the most important number, is 6599, which means 2 ATR is 12, which means that if we are now at 250, I will look at around 240. So let's see what I've done. See here, it was 251 when I took this, the 240, and I put the date for the December 6th. December 6th, because every day I sell 2 ATR on one ETF, 7 days further, 7 days further, 7 days further for like 5 weeks, and then the cycle starts again. So December 6th is right here. I do the weeklies just on the ETF. I don't like to do the weeklies. And the 240, look at this. When I took it was like 600 something like that, 645 as credit. This is a trade that it's up to you if you want to do it. But look how powerful Tasty trade is compared to Robinhood. This is absolutely crazy. SMH, the ETF, can it go to zero? Sure. If everything, all NVIDIA, AMD, all the semiconductors goes tomorrow to zero, yeah, you go to zero. But if it doesn't, and if you want to maybe own it, ideally not, just collect the credit, or if you want to own it, instead of putting $25,000 on the line today, why not put $6,000 as collateral from the 2,000 from the 25,000. Collect up front. Look at this, almost 700 bucks, $685. Collect this up front. For me, this is the trade of the day. From all the trades that I showed, the 7 trades, this is the trade of the day. Collect $700 up front, risk 6,000. It's not risking, it's collateral. It's the same as selling this cash secured put on Robinhood 240. Collect the same amount but put 24,000 on the line. That's how crazy it is. If SMH, the ETF of the semiconductor, goes to, I don't know, 235, yeah, your break even is like 233. Let me show you quickly. If the price of SMH is greater than 233.15, your maximum possible profit is 700 bucks. If the price is below 233 and goes to 0, yeah, this is your max loss. Okay? Okay. You got 72% pop. And look at this number. Theta of $14.29. Just one contract that will lose $14 a day just by doing nothing. If nothing change, of course the price could go down, and sure, but 6,000 buying power compared to 24,000. That means that Tastyworks think this ETF is so low risk. 6,000 divided by 24, that's 25% margin requirement to sell this naked put compared to 100% secured put on Robinhood, which doesn't make sense because the price is not 240 as of now. And this is why I like Tasty Trade on margin to sell naked puts. And if you do this divided by this, let's do the math, 685. This is your money today. If you have $6,000 buying power, you collect 700 bucks today. Divide by 6,000, this is your return. $11, 11%, 11.41% in 37 days, right? This, hold on, let me see. December 6th, let's open this. Yeah, 37 days. If you want to go even crazy, in 37 days you make 11%. If you divide this by 37, you make 0.3% per day by selling naked put. Not on a crazy stock, volatile stock. Selling on a semiconductor ETF, no leverage, 1x up or down on Nvidia, AMD, and all that. Would you take this trade? I don't know. Comment below, and I'll see you next time. Subscribe. Hope this was valuable. I'll start doing a series of the daily trades that I put on the Excel. Some I take, some I don't. Once I have portfolio margin enabled, I will most likely take all of them and more, and we can do this a lot more. But that's what I got. Thanks.